Hey there, traders. Welcome back to another episode of the Disciplined Trader Academy podcast. Today, we're going to talk specifically about a sector where there could be some huge opportunity for not only swing trades, but for some long-term portfolio growth. And that is the AI energy stock play. It has received some attention over the past 12, 24 months, but I think it's going to get a lot more opportunistic in the next few years. So with that said, let's get into this very specific sector on energy stocks today. Now, everyone over the past few years has been focused on NVIDIA. They've been chasing those chip stocks. So that's been the hot thing, is to trade the semiconductors. But here's the thing that some people are missing. AI data centers don't just need chips, they need power. Massive, uninterrupted, 24/7 power. And right now, the energy companies signing deals with the biggest names in tech might be the most underrated trades in the market. And I'm not talking small money, I'm talking billions of dollars, 20-year contracts, and a grid that was never built for this moment. So let's break it down. So think about what it actually takes to run an AI data center. We're not talking about your home router. We're talking about warehouses the size of football fields, packed wall to wall with GPUs, running at full tilt, around the clock, every single day, 24/7. The power demand from AI is growing so fast that the major tech companies aren't waiting for the grid to catch up. They're going directly to energy producers and locking in long-term deals. We're talking 20-year agreements. It's not a trend. That is an infrastructure build-out. So with that being said, what are some of the plays that we want to take a look at? Who's winning? So let's run through some of these names. First up is Constellation Energy. So let's pull the chart up here, and you'll note that regardless of what I'm looking at, I'm always going to look at the chart. I want to see what's going on the chart. I want to know what my support and resistance is. I want to have a snapshot of what that particular stock is doing. But Constellation Energy, ticker symbol CEG, is the first one that's on my list. Meta just signed a 20-year, 1.1 gigawatt nuclear power agreement with them, and that's in Illinois. And that starts in 2027. Now, this is nuclear energy, clean, reliable, and now directly powering AI. And if you take a look at the chart, you can see that it's been in a sideways pattern here from January up till now. So kind of stuck between 272 and 351, stuck in this channel. So just something to look at. Next up is Vistra, ticker symbol VST. We have that one right here. So Vistra also has partnered with Meta, and it's also nuclear. But this one's even bigger. It's a 2.6 gigawatt deal supporting an AI data center in Ohio. Vistra is quietly becoming one of the most important energy companies in America. So Meta is signing deals to make sure that it has exclusivity to some power, so that it can power the Meta AI data centers. So something to think about. Then the next one that I want to look at is Next Era Energy, NEE. And we're going to need to type that one in and bring it up here. So NEE, let's just clean up that chart just a little bit. There we go. So NEE, Next Era Energy. This is a renewables giant. They're working with Google on the large US data center campuses and blend renewables, natural gas, and nuclear together. Well, not together per se, but you know what I'm saying. Next Era isn't picking one energy source. They're building the entire stack. This one, from a technical perspective, is definitely of interest to me. And the reason being is that on my charting, I have the Minerva trend template built in. And this stock, out of all the ones that I'm looking at right now, this is the only one that meets the criteria for the Minerva trend template. So from a swing trading perspective, this one would probably be top on my list. Again, this entire podcast, nothing is meant to be financial advice. This is strictly for educational purposes only and insight. Please do your own research and make your decisions accordingly. But definitely NEE is one that is high on my list. Now we're going to move into the hardware side of things. GE Vernova, GEV, is the ticker symbol. These guys manufacture the gas turbines that physically generate the power. They've signed contracts tied directly to data center infrastructure. So if you want some exposure to the equipment side of this build out, GEV could be one of your names. Now on the natural side of gas, you have EQT, ticker symbol EQT. Very simple, right? So this is the largest natural gas producer in the US. Data centers need baseload power that renewables alone can't guarantee 24/7. So certified low emissions natural gas fills that gap. And EQT is positioned right at the front of this line. And then last but not least is EOS Energy, ticker symbol EOSE. Now they make zinc-based long-duration battery storage. So in April of 2026, they signed a deal to supply up to 2 gigawatts per hour to Turbine X Energy. Storage is the missing piece of the clean energy puzzle. And long-duration batteries are how you make intermittent power sources work for the always-on data centers. Same concept on a retail level, right? If you buy a Tesla roof, which is a solar-powered roof that collects the energy from the sun and powers your house, you want to make that investment in the battery storage system as well that Tesla sells. This way, you can store energy and have energy stored and ready to go if there's a snowstorm or it's, overcast and you're not getting as much sun. There's good value to making sure that renewable energy is stored so that it can make those shortfalls. So EOSE could be in a really great position to supply battery storage for this whole sector. Now, why does all this matter? Well, it matters because the AI build-out is not slowing down. It's accelerating. And every model that is rolled out gets more powerful. Every data center that goes online, every inference request you and I make to ChatGPT or Claude or any of these platforms, it all draws from the grid. Utilities, nuclear operators, gas producers, turbine manufacturers, and battery storage companies are all positioned to benefit from a demand curve that's only pointing one direction, and that is up. The chip trade was phase one. The power trade, well, this might be phase two. That wraps up this short episode of the Disciplined Trader Academy podcast. If you found this valuable, do me a favor, hit the subscribe button, drop a comment, share this with somebody that you think would benefit from it, and drop in the comments, which of these 6 names are you most bullish on? Happy trading this week. Stay disciplined. We'll see you at the next one.